How much more stimulus are you expecting out of China, I guess, to offset what we're seeing with respect to the hit that China's taking as a result of the virus?
No, great question. Good morning. And I think much of the stimulus it will be as much to do with the rhetoric that comes out of Beijing as to the actual or the absolute level of stimulus that's being put in place. And I think that is key. And we talked about the numbers as well. You talked earlier about the numbers and what are the spread and the infections. Whether there's the official number, some suggesting it's as low as sort of less than 10,000, and obviously we've got 70,000 mark as far as the Chinese are concerned. If those numbers continue to trend higher, then I think we're going to see continued stimulus. But at the end of the day, if this is a transitory disease, and if we do get to the point where we see the infection numbers on a day-by-day basis continuing to decline, then this amount of stimulus being put in by the PBOC and by Beijing at some point will suggest that the second half of this year could be a stellar period for emerging markets. At a time, recovery plus stimulus is going to make a very strong market condition, I would suggest.
What do you anticipate will be the impact on the overall global economy?
Well, it's interesting. If you look at what's happened, if we take the US yield curve, for example, and you've had almost a submarine-like sort of plunge back into August last year, the inversion of the curve, we were talking about recession. We've had sort of the resurfacing of that submarine in the early part of this year, and then we've started to decline a little bit. So we've gone from 35 basis points positive spread between 2s, 10s back down to about 19. So I think the impact on the market is going to be largely to drive sentiment. We're going to see the fear factor being priced in terms of the haven trade, that flattening of the yield curve further, possibly if the disease continues to spread and have more of a global macro implication in terms of sort of the slowdown of China and across Europe and potentially into other countries as well. We're seeing the death toll rise, of course, as you say, up to sort of 1,700 at the moment, which is worrying, and we need to see that starting to stabilise. So in the short term, it's really going to be driving sort of a risk-off sort of haven type sentiment, which will drive that to that 2s, 10s yield curve perhaps back down towards sort of the early teens from 19, 20 basis points, wherever it is today, and will also continue to support sort of an up in quality bias within the credit space.
But so far, it really hasn't been driving a risk-off appetite. When you look at global equities, particularly the US market, still sitting at lofty levels right around record highs.
No, absolutely. But as I say, that 2s, 10s has flattened, so that gives a little bit of a caution. But you're completely right that, the level of stimulus that's coming from, already in place from Western banks, from, the dovish tilt, if you see from the ECB, certainly from the Bank of England, the Fed on pause. And then this new stimulus coming from the PBOC suggests that risk on will remain. But I think the underlying theme will be a continued and increasing level of idiosyncrasy from investors as they focus more on fundamentals rather than sort of a grabathon previously that we've had in times of sort of looser monetary policy.